There you go. We'll start in 8:15.
WH Advisor Hassett. There's a study coming out on tariffs on April 1st. Gold tanks over 1% on Thursday after President Trump clouds tariff planning. Warner Brothers earnings lag estimates, but company offers upbeat guidance.
Euro US dollar faces pressure as Trump reiterates tariffs on Eurozone. Tariff confusion leaves markets guessing. Outlook remained heavily dependent on the evolution of services inflation, ECB accounts. Euro US dollar price forecast, wait and see continues amid mounting uncertainty. US dollar index ticks up while gold and yields fall after Trump sows confusion on tariffs.
US dollar down on soft US consumer confidence. Oil slide continues. Bitcoin down again. Is eBay stock a buy?
Russia central bank reserves dollar increased to $600.34.6B from previous 628.5B.
We'll get going right after. So we get a news update in about 90 seconds. That'll tell me it's 8:15, and then we'll get ready for GDP. So I'll log into YouTube now. Yeah. Sowing the seeds of love. Seeds of love. Uh-oh, YouTube glitch, maybe because of my browser update? Let me refresh. Yeah. All right, we'll start with a poll.
Russia central bank reserves dollar increased to $600.34.6B from previous 628.5B.
WH Advisor Hassett. There's a study coming out on tariffs on April 1st. Gold tanks over 1% on Thursday after President Trump clouds tariff planning. Warner Brothers earnings lag estimates, but company offers upbeat guidance.
Euro US dollar faces pressure as Trump reiterates tariffs on Eurozone. Tariff confusion leaves markets guessing. Outlook remained heavily dependent on the evolution of services inflation, ECB accounts. Euro US dollar price forecast, wait and see continues amid mounting uncertainty. US dollar index ticks up while gold and yields fall after Trump sows confusion on tariffs.
US dollar down on soft US consumer confidence. Oil slide continues. Bitcoin down again.
All right, so that means it's 8:15. I'm hot to go, HOTTOGO. Hot to go. Yeah. All right, so welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. Oh my goodness. That's a fair bit. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Because, wait for it, because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble. Focus on the long term. Never risk money you cannot afford to lose. So right now we have a little bit of risk on in the market on the short term, but not on the long term. If you want to know all the great details about our current macro situation, well, you should be a member of traders.com because I already covered that like an hour ago. So this is our opportunity to get together and get ready for GDP. What about durable goods? Yeah. Well, I've already analyzed all of that. What about weekly claims? Come out as expected. So really it comes down to GDP. It's preliminary GDP. Does it matter? Yeah. Meanwhile, 10-year T-note is at 4.25. That means Treasury prices are going up, and that's good. Oil is Oscar Mike on the move off of our bottom support, but also, did you see the pivot point? Dude, seriously, right? Gold below 29. Yep. S&P 500 still below 6K. Dollar, 106 something. Hey, remember it was 108 something, 109 something, you remember? Around 112 or 115? I said it could drop to 80. Whoa. Well, I'm talking euro dollar, but I'm kind of I'm kind of looking at this as the same. And Bitcoin, oh my goodness, 86. Hey, well, when it was at what, 110, 105,000, we were talking about, the chart, not us, but the chart said, what was it, 65, 68? Oh, sounded dumb then. All of a sudden, are you worried about it yet? Well, it dropped from 120 to 85. Dude, at some point, it gets interesting, right? So I've already analyzed the markets through risk. I've already gone through the calendar. COT we did on Monday. Fundamentals, we can look at our GDP number. Okay. All right, pop quiz, everybody. What is the 50-year average for headline GDP year-over-year nominal? Y star. Okay, what's the neutral growth rate? See, R star is the neutral interest rate. Y star is nominal GDP potential growth. Anybody know this? Come on, Bubba. I covered it in the macroeconomics course at investorbootcamp.com. Oh, you guys are too slow. 2.2. Dude, come on. All right. So anyways, everybody's quiet today. All right. So we're expecting 2 well, last time we expected 2.7, came out 2.3. Now we expect 2.2, which is the long-term average. Okay, great. That's not much of an expectation. But, you can see we do expect some level of a slowdown in growth. But it's okay. Like, when you're dealing with GDP at 3.5, something's wrong. Okay? So GDP at 7 is just stupid. Okay? Mismanagement by the government with good intentions. Let's see. Can you figure out where COVID is? Okay? Yeah. So this is making the government freak out. So the government freaked out and they bankrupted your grandchildren. Okay? Yep. Right? That's the look of bankruptcy. Okay? You lost your job, so now you're living on credit cards. And you have no intention of getting a new job. Yay! Boo. All right. So anyways, what happens when there's free money? Okay, you're very rich if you get, let's say you lost your job and you don't have any money. But you have great credit. because you used to have a good job. But now, for whatever reason, mismanagement, you lost your job and you have no money. All right, but you have $500,000 in credit on your 5 credit cards. Each credit card has $100,000 worth of credit. So you're going on vacation. You're in the Caribbean. Oh, senor, right? One more margarita, huh? Nah, dos margarita, por favor. Right? Oh, yeah, you're living the life. You're rich. Wait, you don't have any income. Oh, look how rich you are. Huh? You're staying in a villa. Nice, nice. You're so rich. And then you get cut off. Yeah. So this is America living on credit cards. And really, we still haven't got past that. So what I'm trying to get to is 7 is, these are bad things. You're like, look how productive the country is. Okay, in my macroeconomics course, one of the things I do is I show you the business cycle. And it's just like, okay, just like, right, which is a measure of our economy. There's the business cycle. Okay. What do you call the black line? Yeah, that's Y star. What's Y star? Potential growth in nominal terms of GDP. All right. This is a recession. Okay. Okay. This is the bottom, probably when the central bank comes in. This is your bubble forming and bursting, and then boom. All right. So, but you can do this with businesses. So how could you be too productive? So the example to help understand, like, how can you be overproductive? How can you have greater than potential productivity? And why would that be a bad thing? And the example I give is that we're analyzing a company, okay? And we're trying to create a valuation for it. And we're looking at its sustainability and its profitability. And we're going to, maybe take it IPO or something like that. So for years and years and years, this company has 100 delivery trucks making deliveries to customers all over the place. And the customers love them. The trucks are beautiful. They're always on time. The service is great. But now the owners want to sell the company, and they know that the more profits they show on the books, the higher the valuation and the more money they'll get personally. So usually in a typical cycle, of the 100 trucks, 10 of them are in maintenance. They're getting tune-ups, they're getting brakes, they're getting new tires, they're getting new paint jobs. Great. But to jack up profits, what they've done is taken those 10 that should be in maintenance and instead put them on the road. And to improve profitability, they also let go of the mechanics. So they're not wasting money on a brake job. They're not wasting money on a paint job. They're not wasting money on a tune-up. In fact, they're making money because the trucks are on the road. So revenues go up. So this is a good thing, right? No. So as time goes by, guess what? Some of the trucks start breaking down. Deliveries start to become late. There are accidents because the brakes don't work, and now they have lawsuits. And the company starts crumbling, and they go from being extraordinarily sustainable to extraordinarily profitable to extraordinarily out of business. Richard says, do you incorporate any multi-factor models in your portfolio construction analysis? Maybe. You'll have to join and find out. So anyway, so too much GDP is not a good thing. This tells me this was the government borrowing money and spending it, which is the same as a credit card. Okay, and right now we're getting back to normal GDP, but I think we still have that money. We still have the debt. So now you got your regular job back, but now you're bloated with $500,000 in credit card debt. Yeah, so not necessarily a good thing, right? And so having this database, we can go back years, and this is March, let's say to 19. Let's do this one, end date, fixed. Oh, is it going to make me do this? There's probably a faster way, huh? And it didn't do it. You son of a... There, that's the better way. January 19th. Okay, that should work, right? There we go. So, I guess I should put an average here. But sometimes we're doing really well. Remember, this is a booming market. So, and then you can see a bubble forming here and then later. But this is a really good market. 15 to 19 were good years. And, if you average this out, it's probably pretty close to the 2 something, right? So we're back to that normal level. I just wanted you to know the context of the number. So what does 2.2 mean? Yeah. All right, so we're going to go to markets and get this live.
U.S. dollar index rallied
10,
calm.
9.
U.S. GDP second reading for the fourth quarter.
Kickstart the North Amir. Trading day with a technical look at the Euro-US dollar, US dollar, yen, and pound US dollar.
Was 3.1.
Eurozone lending to private sector strengthens.
French producer prices continue to fall.
Russia central bank
2.3 as
reserves
expected.
dollar increased to 600
It's not a bad number.
6B from previous 628.5B.
WH advisor Hassett. There's a study coming out on tariffs on April
Fed can't
1st.
cut.
Gold tanks over 1% on Thursday after President Trump clouds tariff planning. Warner Brothers earnings lag estimates, but company offers upbeat guidance.
Euro-US dollar faces pressure as Trump reiterates tariffs on Eurozone. Tariff confusion leaves markets guessing.
So we got that news live. That was good, right? That Squawk Box is going to be free for everybody at traders.com. I know some of you might be spending between, $100 and $400 a month. So anyways, the GDP is not in trouble. No need for the Fed to slash and burn interest rates to save our financial souls. That's where we are now. So what do you think? Are we going to count this as a bottom? Is it risk on from now? Well, we need to find out. A break above here is a very big deal. Because now we're analyzing this bottom. Let's go further out. Let's do daily. Okay, where's the other bottom? Okay, it's really this whole zone. This area, that area, this area, this area, that area, that area. Okay. All right. So where's the top? Top, 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 top. So looking at it from a daily, okay, the buy zone's lower, the sell zone's higher. And there's a little bit of action going on at this price, which we already analyzed on smaller time frames, but this goes out. So, yeah, if you're going to bring it down, where would you say the number is? 58? Did I comment on NVIDIA? The word on the street is it came out roughly as expected. But there's a way to check that quantitatively. Let's just do that now. How did the market react to the news last night? Well, let's use some AI to figure that out. Okay, neutral. But it improved since yesterday. We went from a 6 to a 19. So Brian, generally accepted, if over the last 7 days, 35 websites wrote articles about Bitcoin. No, right? 261 articles this week on 35 websites, including Barron's, Bloomberg, Business Insider, CNBC, Forbes, Fox Business, Kiplinger, Market Watch, New York Times, New York Post, okay, Reuters, Schwab, Seeking Alpha, TechCrunch, Motley Fool, The Street, Yahoo Finance, Zacks, and maybe I missed it. I imagine FX Street. Let's see. No, well, no, we didn't read any articles on FX Street. That's interesting. That must be a mistake. Investor Business Daily. Okay, so we read all these articles, and we remember. Okay, we remember. Oops, God dang it. I guess I have to bring it back up. We remember each article and how the market felt about it before the NVIDIA news last night. And then the news came out and it's an improvement. It's still not amazing, but there's a big jump since yesterday. What do you guys think about that? Is that helpful? Okay. So you go back to the 22nd, there was only 124 mentions of Bitcoin on the websites that we track, but it is dozens. Then it grew to 168, then it grew to 192, then it grew to 173, and then boom, everybody's riding it. So we went from 124 articles written of just a few days ago to double that. Cool, right? So does that answer your question, Brian? So I didn't cover it. 40 websites covered it. And we just have this at our fingertips at any time for any reason. What about the change? What about that news about gold? Yeah. Gold lost favor over the last few days, in particular, the last couple of days. 34 to 25 to 25 to 20, and now 10. Wah, wah, wah. Yeah. Gold lost its shine, baby. Really? You guys remember, I have it on another chart somewhere, but I drew this out yesterday that our trade plan was sell that for now, right? Not forever, but for now. Cool, right? And the market is changing its mind quantitatively. I can prove it to you. So what date is this? Let's do the first top. The first top, not the double top. The first top, the highest high is the 20th. The double top is the 24th. So somewhere between the 20th and the 24th, something changed. Okay. Okay, that's the 20th, 21, 22, 23, 24. And look at that. That's the top in the price of gold. Then, right? But it was also the peak of sentiment. Then it goes flat, then it goes flat. And on the 24th is the double top in price. Well, the 23rd, we drop. Okay? And then we drop. And then we drop. So we did have a positive score in the mid to high 20s, and now we're pulling a 10. Oh my God. Okay. Can somebody block these stupid bots? I mean, if a service has to resort to spamming people, it must be a shitty service. But if somebody, come on, moderators. Yeah, here's another one. So kill these three guys. Yeah. Get him, Jim. Get him. Well, let's check the markets. And let's see.
US GDP expands by 2.3%.
Okay, we can look at durable goods. No, that's a big number there, month over month. Big number. It's a volatile report, though, because it comes out like it was negative 0.1, negative 2, and now it's plus 3. I mean, dude, make your mind up. Okay. All right. But what I want to do is claims. Okay, initial jobless claims 242. Okay, much higher than expected. So what does this tell us? All right, well, we can do it fundamentally. And you go to fundamentals, obviously, employment, unemployment. Oh, sorry. Fundamentals, employment, claims. Sorry. Okay, so we expected 222, and we're much higher than that. All right. Let's add some more time to this. 90 weeks. How about that? Instead of 90 days. And that is significantly above average, but 242. Can you see this? Let me zoom in for everybody. A little better, right? 242 is in this zone. Let's make this, I guess I'll make this black. 242, that's 230, 40 is about there. So that's a giant spike, isn't it? Okay, so the GDP number was all right. No need for the Fed to cut. But if there's a big spike in unemployment, that could allow the Fed to cut. Job losses. Okay, good. Now, I wonder if this has to do with people losing their jobs in the U.S. government. Yeah. 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 Time to cull the herd. Trim the fat. You know, it's interesting, like after COVID, there was a big hiring spike and unemployment dropped below 4. We were at 3 something, which is just crazy. But research had shown, and I forget the source of the research, so I apologize for that. But research had shown that the people that were hired were not productive people. There was a shortage of people, and companies were hoarding, so they didn't let people go. They wanted to keep them. And so those that needed employees decided to just hire anybody. Anybody. That's dumb, by the way. That's what a B-level manager would decide to do. That anybody is better than nobody. That's stupid. And so anyway, so B people hire C people. And those C people came in, and guess what they did? Well, they got a high wage because they demanded it. And there was a shortage of people, so wages go up. That's where inflation came from. But also, guess what? They were not very good workers. So it'd be interesting, like I think companies have gotten rid of those workers, but government is slow as molasses on a cold Georgia morning. I wouldn't be shocked if they find out 10,000 people working for the government are not actual people. I wouldn't be shocked if there's a scam going on. It just makes sense to me that there's a scam going on where people are billing the government as workers and it's fake. There's no person. They don't log in. They don't report. Maybe if it's a good scam, they have AI. It's a fake employee pretending to work. I don't know. I wouldn't be shocked. I don't have any evidence of that. But I think when we do an audit like this, now companies do it all the time. Government rarely does it, right? So doing a big audit like this, I think is interesting and possibly good. I don't mean to go political on you guys because some of you guys would probably hate what's going on. Okay, fine. I'm not a hater. I think an audit from time to time is good. I think if you're an employee and somebody asks you for a productivity report, I don't think it's too much to ask. But it'll be interesting. Some people will say, well, how dare you? I'm not going to report to Elon Musk, the new king of the United States. No, I'm not going to do that. Well, those are probably bad employees anyways. I don't know. Again, this is not my opinion politically, but if I ask for a report and I'm your employer, I get my damn report. If you're a rotten apple, I don't need you in my company. So I see that as pretty reasonable. And so again, if you're anti, Elon, anti Trump, anti what's going on, I don't mean to get up in there and get you all mad. But it's just like I see it as an audit, and I think it'll be interesting. Those that don't report maybe are not in the game, and then some of those people may not actually be real people. It'd be interesting if we find out that there's like, I don't know, 5,000, 6,000, 7,000 fake employees. Why not? There's millions. You don't think there's some, I don't know, mafia ring, some Russian hacker ring that has 10,000 fake people employed at the U.S. government? I think there probably is. Shoot, maybe they're real Russians working for the U.S. government. Yeah, I mean, so whatever. So I'm like, yeah, it needs to be done from time to time. Remember, Clinton did it. So if you're a Democrat and you're like, you hate Elon now, you throw eggs at Teslas, but you also hate Trump and you think this is all bad. Hey, Clinton did it. So there you go. Like, for example, Clinton shut down a whole bunch of military bases. And a friend of mine, his father was an admiral in the Navy. And he told me there was one day in his life, he saw his father cry, physically cry. His father sobbed. Yeah, because of Clinton. Clinton killed his Navy. And he had to spend the rest of his career shutting bases down and laying people off. Hey, dude. It was 1995, 1996? I don't know. We were all kicking ass. The internet was taking over. There was peace in the world. We didn't need any of this stuff. Okay. That was Clinton. So, yeah, that's all. So, if that was the last audit, then I think we need a new audit. So, anyways, cool. So, it'd be interesting if going from 223 to 246, right? That spike is it government layoffs? Because I do remember during the COVID period, we had decent NFP news, but then when you dug into it, it was a lot of government, local government, state government, federal government hiring. Yeah, so I wonder if that era is over. I don't know. Cool. I don't know. So we can get that report. Okay. Where does that report come from? Does anybody know? Where do we get that report? It's buried in the government somewhere, right? You'll never find it.
Euro US dollar. Gains are capped in low 1.05s. Scotiabank. Trump pledges an additional 10% tariff next week. Says Canada-Mexico tariff still on. Canadian dollar steady but fails to gain significantly. Scotiabank. U.S. GDP expands by 2.3% in Q4 as initially estimated.
U.S. dollar posts limited gains amid tariff uncertainty. Scotiabank.
EU steel industry needs more protection, says French industry minister.
U.S. initial jobless claims rose to 242K last week.
U.S. weekly jobless claims climb much more than expected.
U.S. durable goods orders rise 3.1% in January versus 2% expected.
Pound yen jumps to near 189.60 ahead of Trump-Starmer meet in Washington.
This is what I'm trying to get to. Hey, trader, did you hear the news? See, what I do, really, I use my phone and I just run that Squawk Box on my phone. So while I'm out, while I'm working, sometimes, just going for a walk, I'm listening to the news. Isn't that cool? All right, so let's take a closer look 242. And the week before revised up. Weekly, 4-week average going up. I know we'll get this from NFP coming up. We'll be able to see government layoffs. Just going through this. Yeah. So New Jersey got crushed. Rhode Island got crushed. Minnesota. Yeah. Washington. Interesting. The largest increases in initial claims for the week. Kentucky got crushed. Tennessee got crushed. Washington got crushed. Michigan got crushed. Minnesota. So the decreases, the largest increases in initial claims, the largest decreases in claims. Yeah. All right. Interesting. All right, so it doesn't tell us what percentage of government employees, but we will get this as part of non-farm payrolls. Brian says, probably have an old tablet you can do that on. Yeah, for sure. For sure. So the one on YouTube, I haven't set it to have a delay, but because YouTube, a latency, I guess it is, like even this live stream is on the lowest latency possible, which means it's pulling the fastest internet that Google allows or YouTube allows. And sometimes there's a 1-minute delay even with this. Certainly 30 seconds. So, for example, I'm still looking at the news release. Oh, there you go. Yeah, so let me count. So I'm looking at my screen and then I'm looking at what you see on YouTube. Okay, 3, 2, 1, 1, 2, Mississippi 3, Mississippi 4, Mississippi 5, Mississippi 6, Mississippi 7, Mississippi 8, Mississippi 9, Mississippi 10, Mississippi 11, Mississippi
Pound.
12,
Focus on
Mississippi
PM Starmer
13,
visit to Washington.
14,
Scotiabank.
Mississippi,
Pound
15
sterling
second
weakens
delay.
against U.S. dollar as U.S. durable goods orders. Data beats estimates.
15-second delay. But so Brian, if you log into traders.com, you can run it in real time. This news came out in real time, right? So we can already see in 17 hours and 2 minutes, German retail sales comes out tomorrow, right? Yeah, it's a good calendar. So you can do all this too. So in 23 hours and 32 minutes, we have Canadian GDP and we have PCE also 23 hours and 32 minutes. PCE is huge. So that's going to be a good Friday. Okay. So the headlines come out in real time, but also the news results come out in real time. And it ticks down in the last few seconds. Like you saw, we did a countdown from 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. And then it waited, boom. And it posted the news as soon as it came live. So, yeah. So run it from there. So, guys, let me fish for a compliment here. How am I doing as far as someone trying to provide real value to you and your trading business? Things like this headline radar, things like the sentiment radar, things like the implied volatility. Are these things like I'll speak for myself. I'll give myself a compliment. I'm amazed. I think it's amazing. And now we can just pull up a database and look at the history of weekly claims and just pull it up and look at it. And now I can just click a link and pull up the actual report. Okay? Yeah. It's cool, right? Yeah. How many people here would like me to start a prop firm? So you can get some funding. Yeah. How much should the test be? The trial? How much should the trading trial be? Is it $50? Is it $100? What do most prop firms charge? Okay. I'm thinking about this. No test, no trial. You put some skin in the game, pay a monthly fee. That's it. How much of the profit should you keep? I'd like you to keep all of it. How about 100%? That's what I'd like. So I'm trying to get this done for you. No trial, no test, no bullshit. No profit sharing. But you have to be a subscriber to traders.com. Okay? Cool. So I'm working on that. Yeah. No, Joe, I'd want you to have 100%. How about 100/0? How about that? So that's what I'm working on. I'm working on it, Jim. Life's complicated, but I'm working on it. All right. All right, let's do some techies. Well, Richard, what I'm thinking is just multiplying whatever you put in. That's what I'm thinking, Richard. How about 4x whatever you put in? You put in 5 grand. How about we put in 20 grand? You have a 25,000 account. You keep all the profits. That's it. We're done. See, now there's built-in risk. See, there's built-in risk management. You'll do whatever it takes to not lose your 5 grand. Great. Cool. How would it help me? Okay, Richard, let's say you had a $25,000 account and you were trading. Do you believe you can make $300 a month profit? You tell me what you think. Can you make your $300? See, I don't know what you can do. I don't know what you're capable of. I don't know how good of a trader you are. I don't know how much money. So if you put in 10 grand and it was, 50 grand, that's one thing. But if you put in 1,000, now it's only 5,000, well, then it's a different thing, right? I don't know. That's for you to decide. But what's in it for me, I need to pay for all the technology and all the people involved in running traders.com. This is a shit ton of expense. But if you're a half decent trader and you made the $300 back in your trading and then some, well, you'll be a subscriber forever, won't you? That's what's in it for me. People get paid. Programmers get paid. Data providers get paid. Infrastructure people get paid. All the AI voices get paid. Okay? So that's what's in it. If it helps me pay for all this infrastructure, that's what's in it for me. I'm going to sell Blue Sky. I haven't put it on my important list, but yeah. So if you want to buy that company, it's domiciled in Hong Kong. Yeah. All right. So anyways, I think that's cool, right? See, in my mind, I'd like you to make money. That's it. So what if TRADARS.com was free? Would you use it? All right, let me sort. I only want trend patterns. Denise says, yeah, so what happened to Blue Sky? It's the same idea, isn't it? Yeah. Well, that's what I want to build, right, Peter? I want to build something that creates so much value. There would have to be something wrong for you to not use the service. I think that's pretty sustainable. Okay? It'd be like, wow, really? You don't use traders.com? Why not? Oh, you're clinically insane. Oh, and you live in a van down by the river. Oh. Okay, that makes sense. You know, I want to make that kind of product. So looking at this, we got some heavy weight in the short-term charts of the S&P 500. These breakouts are technically important on the small time frames. On the higher time frame, the S&P 500 is bearish, and there was an opportunity to sell 14 hours ago. You know, Jim, it's one of these things, I suppose, it's just, I want to democratize it as much as possible so that it's not intimidating, it's very accessible, it's very affordable, it's very helpful. It makes a positive difference. So that's that. I want to be in everybody's life every day, when they're trading life. But I also want them to have good infrastructure and build good, sustainable businesses. I'm an entrepreneur. I'm a venture capitalist. I want you to build sustainable businesses. That's just how I think. So this is my solution to the quote unquote problem. Okay, so we'll do trends here on all the Forex. Okay, pound CAD up 11 minutes ago. That's strength with an opportunity. Kiwi Swissy down. That's weakness with an opportunity. Aussie, that's weakness with an opportunity. But again, you're probably 11 minutes late. USD Mexican peso sideways. Aussie Swissy bearish with an opportunity. Pound CAD bullish with an opportunity. Pound Aussie, okay, bullish with an opportunity. By the way, I think these were all trades that Jessica set up on Monday. It's Thursday. Nice. Okay, Aussie dollar, that's bearish with an opportunity. New Zealand yen, okay, Kiwi yen, bearish with an opportunity. Dude, look at the day. Look at the day. Oh my gosh, these are great. Okay, Aussie yen, okay, that is bearish with an opportunity. Swissy yen, bearish with an opportunity. USD yen, bullish with a threat. Pass on that one. Pass on that one. Pass on that one. Pass on that one. Here's an opportunity. USD CAD 60-minute. Euro Swissy pass. USD Swiss franc pass. CAD yen pass. I mean, look, if it fails to do that, then there might be a short. So go back to CAD yen and see if you can catch a roll reversal, but you're looking for an opportunity down. This is outlining a potential threat. Okay, USD yen pass. So I just did the first page. Now, it took me a lot longer to do it out loud. Normally, it'd just be seconds. And we have 2 more pages of such opportunities and threats. And these are only up, down, and sideways patterns. Ripple pass. Ripple pass. ADA. Well, it's bullish with a threat. Litecoin. Let's see. That's bullish with an opportunity. Ripple pass. ADA daily. That's bearish with an opportunity. Litecoin, which puts the shorter time frame into perspective, LTC USD is bearish, so I might override this. Ripple, okay, that's bearish with an opportunity. The pattern suggests selling around 223 with a target of 157. Oh my God. Nasty. Holy schnicker. Let's do some oil and gold and silver. Let's start with the higher time frames. Brent, if it doesn't break lower, it's a buy. Silver, bearish with the threat. Silver on the daily is sideways. Silver on the hourly chart is sideways with a maybe up. So again, that's a pass. Gold on the 30-minute chart is bearish with an opportunity. So a lot of these things are not hot to go, HOTTOGO. So the Forex market looks the best right now. Okay. And then we go back. Okay. We're back here again. If we go to the 4-hour S&P 500, it says down, and daily is down, and then we pick it up around 5851.86. Okay, this came out 4 days ago, so you should already have known to sell at 6K. The target of 58.50. I think earlier I said 58, so 58.50 is okay by me. But it also, okay, we have 23 days left. 23 days left according to the pattern before, if this pattern continues, before we get an opportunity. It's trying to project how long it'll take. Does that line up with seasonality? "23 more days, huh?" Yeah. Oops. 23 more days. Boop, 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 boop. So we know somewhere in March, we usually bottom out. So we know to plant the seeds somewhere in March. Okay? What we anticipate is peak to trough to peak. This is our mind This is what we understand. Now, this is what's actually happened. Okay. Fine. Was it shocking that it came down? Not at all. Not at all. Totally normal. A lot of people have asked, how come the stock market's down? Because that's the right thing. So, already covered in the annual outlook that somewhere in this window I intend to buy the stock market. People in my council of investment advisors that help me invest money into the stock market know the thought. We talk about it all the time. We plan for it in months in advance. We plan for these things. Okay, great. So now we look at a daily pattern on the S&P 500, and it says in 23 days, we'll be at the bottom of an uptrend. Well, dude, that lines up with this tickety-boo, doesn't it? Cool. So somewhere in those 23 days, I'll probably want to buy the dip. And when will I take profit? Does anybody know when I would take profit if I were me? If I was trading this versus investing's a different thing. But if I was just, a trader, just whatever that means, right? Just a trader. If I was a trader and I wasn't going to buy and hold, when do I take profit? Tell me when I told you. I told you in January. What day do I look to take profit? Canada Day, July 1st, which is right here. Cool. No, that's this one. 12/12 is here. You see, somewhere November to December, somewhere in there is profit taking. So for me, it's typically 12/12 at the end of the year, but I'm typically a buyer here. Okay. So buy, sell, buy, sell. Okay. Oh, look, it's down. Really? Of course it's down. Now what? Yeah, I'm going to buy it. And then once it's gone up for 12 weeks straight, what am I going to do? Take profit. Then it'll fall for 12 weeks straight. And then what am I going to do? I'll buy it back. It'll rise for 12 weeks straight. And then what I'll do? I'll exit. Does anyone remember the first 3 weeks of January down, then up, okay? And then February to March is down, and then somewhere around end of March is back up. April is up, May is up. I mean, I've gone all over, I've done this. In January of this year, January of last year, and January the year before. Do I know it is going to happen? No. But I have a plan. I plan to win. But I also plan to know when I'm wrong. Okay? I plan to know when I'm wrong. Being right is easy. What do I mean by that? Well, let's say you buy an asset because you spent tons of time doing research and you have tons of data, well beyond what most people have. And so you uncover an underlying intrinsic value in an asset. So you buy it and it goes up in value. Are you surprised? No, not at all. You're like, well, that's why I bought it. Oh my God, that thing you bought is doubled in price. Yeah, I know. I analyzed it. I did a deep dive in the data. I have all the analytics. And it was undervalued, so I bought it. Yeah. So it shouldn't be surprising. You're just like, well, that's why I bought it. Well, how did you know? I had all the data and I did all the research and I thought really hard about it. And then I made a decision and I bought it. And it went up because that's what I expected it to do. Right? Like everything should just be so logical. Everything you do should just be so logical. And you're like, yeah, it went up. Or, yeah, I took profit. Why? Well, it usually gives back value around now. So I got out. You're like, well, that makes sense. Of course it makes sense. So I think the next step, once you just figure that out, everything you do is logical and you can prove it and you can argue your point because you have the data. So you have the argument. Look at this, look at that, look at the other thing. Boom, that's why. Okay. But the more important thing is knowing when something unusual is happening. And you're like, oh, that's weird. I want out. Or that's strange. I'm going to pass. That's the next level, by the way, guys. That's the next level. You think it's making better decisions to get in? No. It's making better decisions to pass, to make that clearly and quickly, or to get out. Because you're like, man, none of this is making sense. I'm going to have to pass. So now everything you do is logical and you only do it in the right market conditions. Oh, well, that makes sense. Well, of course it makes sense. Cool. So I can't wait to make this even better. So I have some changes coming, I should say improvements. The next iteration, at least the structure of traders.com for you. Things like I'd like to be able to offer you funding. Yeah, so I'm working on that. Is it done now? No, but it's very hopeful. Great. And then once I get all that taken care of, I think it'd be interesting to make some technical updates to a lot of our reports. I don't think we need, there's a few reports I want to build in here that we don't have, but it's not crazy new stuff like I've been doing. The last year, like the stuff that I've been doing, like the Squawk Box is ridiculous, right? Now you have AI reading hundreds of reports for you, and we just tied it into the price changes. Market sentiment I can prove to you, and then you go back and look literally to the day of market sentiment changing, price change. You're like, oh my God, and I can prove it to you. Like, wow, that is so crazy. So I'd like to add a couple new things, not crazy new things, but then update some of these that make it easier and more easier to understand and I don't know, just sort of like updates. Cool little updates. So I think one of these weeks in the summer, maybe I'll take 3 days off or something, right? And instead of doing my normal work and all the things I do, maybe I just sit down for 3 days and go through every single page. What do I like? What do I don't like? Could this be more clear? Can I add information? Can I subtract information? Can I move things around? Just literally on this page alone spend an hour thinking about it, taking notes and adjusting. Things like spell it correctly. Really big, important things. And, and like that one might be easy, but like these pages are pretty sophisticated, right? What do I like? What do I don't like? I don't like that color. What about that? I don't like that space. What do I don't like that? I'd like this to have say more. I'd like it to say more. Are these numbers accurate? You have to look at them. Do I agree with these things? Do I agree with these things? You know, does this need to take up so much space? Does this need to take up so much space? Where else could I put this? Oh, ooh, 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 ooh. Wouldn't that be cool, guys? Yeah. The other thing I'd like to do this summer is lots of new training specifically for traders.com. Okay? So those downloadable cheat sheets that are in the link in the description below, you can download these flashcards for training. So how about every single flashcard has a matching training video? You know, stuff like that. How about market sentiment training? How about implied volatility training? You know, that kind of stuff. There's also next year the potential to add detailed fundamentals on stocks and technical opportunities and options. So it'd be interesting to expand into those two new asset classes. Cool, right? So help me make this a reality. Stock market's open. Ding, 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 ding. Time for me to go. So again, if you want real-time squawk, you just click on markets now. Pull this up on your phone. I have mine right here.
Schmid. Uncertainty might also weigh on growth.
Euro US dollar
Pull it up on a tablet or just
tumbles as Trump threatens to
just
impose
open it up and
reciprocal
minimize it.
tariffs on April 2nd.
Iceland inflation eases to 4-year low. US dollar Swiss franc stretches to the top side and tests the 200-hour MA. Get above is a tilt higher.
Fed's Schmid. Concern growing about recent increase in inflation expectations.
Trump says Mexico, Canada tariffs to take effect March 4th. Pound. Focus on PM Starmer visit to Washington. Scotiabank.
U.S. stocks may see initial strength on upbeat NVIDIA earnings. Pound sterling weakens against U.S.
Well, Jim,
dollar
thank
as
you for
U.S.
everything that
durable
you
goods
do
orders.
for the
Data beats
community.
estimates.
I appreciate
Euro,
you too.
U.S. dollar. Gains are capped in low 1.05s. Scotiabank.
See you tomorrow.